What's the easiest and simplest strategy to analyze the chart? Let's trade this strategy in live market conditions. Hi and welcome back to Trading Strategy Testing channel, where we learn and test your trading strategies and share with you tips on how to improve your Forex investment. Our channel is growing every day thanks to your support and encouragement. The live market series where we trade the most popular strategies seems to be extremely popular within our community. There is always a need to learn more about the best Forex, stocks and commodity trading strategies, which is the purpose of this channel. We enjoy trading, we just wanna teach it with live market actions. Today we will share with you a simple strategy on how to analyze the chart and enter a live market trade, which will hopefully make us some profit. As usual, we will carry out our fundamental and technical analysis, explain the strategy and implement it in live market conditions. If this is your first time here, consider subscribing to the channel and give this video a thumbs up to help the channel grow and encourage us to make more content in future. Let's get started.
Today we are going to trade the USD Swiss francs pair. We will carry out a simple fundamental analysis. If you wish to go through the entire strategy and to understand our choice of the USD Swiss francs pair, please consider checking out the two videos we have published recently where we traded Forex based on the gold fluctuation. The two videos are extremely helpful for traders who wish to trade the Aussie dollar and the Swiss francs pairs. To sum up, gold has been consolidating following a long stint to the upside and has started to show signs that a break to the downside is on the verge. The US markets are closed today due to the Labor Day, but we can notice the development of various technical setups that need to be monitored, especially if you are interested in gold or its highly correlated pairs. Based on our analysis, the gold is bearishing further since the release of the unemployment figures last Friday and will eventually approach the $1,900 level soon. We have traded the unemployment report major news last Friday. You can find the video in this channel. Before we enter the market, let's check out the performance of the gold in the last 24 hours. You can clearly see a solid bearish momentum. We have discussed on various occasions in the past the strong correlation between the price of the gold and the Swiss francs. 25% of Switzerland's money is backed by gold reserves, as well as the safe haven status of the Swiss economy, which is sustained due to the policies of the Swiss National Bank. As a result, the Swiss franc moves along with gold. On the other hand, there's still a psychological tilt when it comes to gold whenever the value of the USD decreases. There are many theories behind this financial relationship. The obvious one is the fact that a falling dollar increases the value of the other currencies. This increases the demand for different commodities including gold. If we combine both facts, we can assume that when gold goes up, USD Swiss francs goes down. On the other hand, when gold depreciates, USD Swiss francs goes up. Based on the fundamental analysis we conducted earlier today as well as the previous analysis that we have made last week, we can come to a conclusion that the price of gold will see a bearish pressure as it continues to make lower lows, but it will probably remain above the $1,900 critical support before gearing up for another test of the $2,000 level. We will look for an opportunity to go short on the USD Swiss francs. Alright, let's do our technical analysis to locate a strong entry point. We have received many requests from the subscribers in the comments section asking us to make a tutorial on how to draw the major key levels. Well, today we will share with you some tips on how to locate the strong key levels. We will use the Renko chart, which is a type of financial chart that measures and plots price changes. It consists of a succession of bricks that shows the obvious market trends and increases of the signal-to-noise ratio compared to typical candlestick charts. We will adjust the settings of our chart. You can proceed accordingly. Feel free to leave your questions in the comments section so we can produce the content that will help you make your trading journey easier and more profitable. Let me know if you wish to learn more about the Renko chart and its settings. After setting up the chart, we will draw the major support and resistance levels. The Renko chart makes it easy for us to define the key price zones. Once done, we will switch back to the normal candlesticks chart to draw the remaining support, resistance and trend lines. Later, make sure to highlight the most recent swing high or lows. As usual, start from the daily time frame all the way down to the 15 or 5 minutes chart, which is where we tend to set our entry and exit. Avoid drawing the trend lines which are not obvious, and don't spend too much time trying to identify the swing high and lows. If it is not easily seen, it probably means that it's not that significant. This trading method could be applicable in Forex, stocks, commodities and indices markets. In some cases you need to pay attention to gaps which occur when the security's price makes a significant spike in either an upward or downward direction. You can notice a significant bearish momentum prior to our entry zone, which is associated with the closure of the London session. Always avoid entering a trade when the market is opening or closing. You might be stopped out in a matter of seconds. The market tends to be in a high volatility condition during this particular time. You can notice that our trade is taking place after 1 hour from the opening of the New York session, which is enough time to see some regular patterns. Always remember to highlight any key level that might strengthen your stop-loss setup. It's always recommended to have some major support, resistance or key levels protecting the stop-loss. The 200 exponential moving average, historical and psychological as well as the pivot point levels, are also important to have a valid stop-loss entry. If you are not able to ensure such setup, be sure that the market is unable to offer you a reliable entry at the moment, so it's better to stay out. Only enter when you have a solid setup to make sure that your hard-earned money is properly invested. We have used a calculator to identify the right volume and control the risk allocated to this trade. Avoid risking more than 3% of your investment. You can refer to our previous videos in this channel for more ideas on how to properly control your financial risks when trading Forex, stocks or indices. Trading Forex or other markets is just a short-term investment business. Remember to secure your financial position at all times. It is important to have the right entry, volume and take profit. In case you have some doubts regarding your trade, the best thing to do is to avoid entering the market. Another risk that seems to be neglected by many traders is the financial liquidity risk. Some Forex currencies tend to be more liquid than others. The currency pairs with high liquidity show high levels of supply and demand. Trades can be executed very quickly, and it's better to have direct access to the platform, or at least set an alarm to be able to trigger the trailing stop feature when the price gets to your desired level. Alright, the buy stop order has just been triggered. While waiting, we will answer some questions from the YouTube comment section. Kindly give this video a thumbs up and subscribe to this channel to be notified every time we post new content. The first question is from Esther regarding the pivot point indicator. Pivot points are usually used by traders in equity and commodity exchanges. They're calculated based on the price variations during the previous trading sessions, and they're used to predict support and resistance levels in the current or upcoming session. The basis of pivot points is such that price will often move relative to a previous limit. There are different styles of trading the pivot points. The most popular ones are the breakout and the swing strategy. The entry in both cases should be based on a pending buy or sell stop order. If you miss the entry, it's better to avoid using a limit order, as breakout are pretty common in this strategy. Regarding the exit, you can use the different levels the pivot point indicator adds to the chart as a support to your trailing stop exit strategy. We are making a video soon trading the pivot point in a live market condition. The video will cover more information about our experience trading this popular indicator. Let's get this video to 1000 likes to let us know whether you're interested to know more about this popular indicator. The second question is from Oscar, who wants to know the difference between the bid and ask, as well as my favorite time frame. The bid and ask prices are usually different from one another, bid price being low and ask price being high. The difference in the bid and ask price foreign exchange market is called a spread. The bid is used when selling a currency pair. It is associated with how much of the quoted currency will be obtained when you buy 1 unit of the base currency. On the other hand, the ask price is used when buying a currency pair. It is the amount of quoted currency that has to be paid in order to obtain 1 unit of the base currency. Regarding your second part of the question, Oscar, I don't have a favorite time frame. I just use the weekly, daily and hourly one to draw the major support and resistance levels. And leverage the 15 and 5 minutes time frames to define the most recent swing high and lows, and also to enter the market. I always advise my students to use all of them properly. For example, it's not recommended to enter a trade based on the 1-hour chart, even if you're swing trading. The answer might be different if you are a system trader or you're trading other financial instruments such as stocks, securities or indices. By the way, we would like to thank you for all the positive and sweet messages and comments you guys are leaving every day. It means the world to us. Every thumbs up, subscription and share encourages us to make more video content and share as many tips and recommendations that we have acquired throughout our years of experience in trading Forex and other financial instruments. We will continue offering more tutorial and live market trading sessions, so make sure to hit on the subscribe button, as well as the bell icon to be notified as soon as we release a new video, and make sure to join our social media accounts to be able to interact with us, as well as our fast-growing community. We are about to hit the take profit level. You can proceed to close a certain portion of your position and let the trade run with a manual or auto trailing stop loss. I won't do this today as it's the 7th of September, which is the Labor Day in the United States, and we just don't have enough reports or news to support our trading direction. Alright, we have just hit the take profit level and made a profit of 10 pips. I checked the chart afterwards and realized that we could have made a minimum of 20 pips if we hold the position longer. But small consistent profits will get you to double your account in a very short period of time. Always make sure that your risk is under control and all of your actions are supported by solid technical and fundamental facts. We will cover in the coming videos some tips on how to decide whether you need to secure your position or not. Make sure to subscribe to our channel to be notified as soon as we release the video.
Wait, we have got a little surprise for you guys. As per your request, we are going to start a new YouTube series where we grow a small Forex account together. We are not sure of the balance you want us to start with, so we created a poll on our Facebook group to get your opinion. If you are not in the group yet, feel free to join us by clicking on the link available in the description section. Thank you for watching and happy trading.